Number of tech's biggest leaders and CEO was on the Hill today. Emily Wilkins caught up with Jensen Huang on his way in. Hey, Emily.
Hey, Carl. Well, yeah, a lot of CEOs on the Hill today, a lot of lawmakers speaking with them about AI in the future, which is exactly what brought Jensen Huang here today as well to talk about how the U.S. needs to remain competitive when it comes to AI. I caught up with him for a few minutes and I asked him a little bit about how tariffs were impacting everything.
There should always be policy that enables and supports and accelerate the ability for us to onshore manufacturing. But with willpower and with the resources of our country, I'm certain we can manufacture onshore.
What's your reaction to the Wall Street Journal saying Huawei is advancing to catch up to your highest level chips?
There's no question that Huawei is one of the most formidable technology companies in the world. And they're incredible in computing, they're incredible in networking technology and software capabilities, all of the essential capabilities to advance AI. And they've made enormous progress in the last several years. Whatever policy the administration puts together really should enable us to accelerate the development of AI, enable us to compete on a global stage.
How far, can I just one more, how far behind do you think China is?
China is not behind.
Anybody who's ahead of you?
China is right behind us. I mean, we're very, very close. But remember, this is a long-term. This is an infinite race. There's no, in the world of life, there's no 2-minute end of the quarter. There's no such thing. And so we're going to compete for a long time. And just remember that this is a country with great will, and they have great technical capabilities. 50% of the world's AI researchers are Chinese, and so this is an industry that we will have to compete for.
Huang will be visiting the White House later today to continue to talk about AI as well as tariffs. Of course, the White House is currently putting together a plan for what their path forward with AI will look like. Guys?
Early on Wednesday, Nvidia's stock dropped over 4% as news from Washington and Wall Street stoked concerns about the Trump administration's tightening trade regulations for chips and reducing demand for AI. The latest report suggests a bigger possible decline in demand for AI infrastructure. Super Microcomputer, a customer of Nvidia that manufactures servers utilizing Nvidia's architecture to sell to data center operators and tech companies, lowered its revenue and profit projection for the third quarter. The stock of Supermicro fell 18% on Wednesday morning. During a market sell-off triggered by unfavorable early morning data on U.S. economic growth and the labor market, tech stocks were also under widespread pressure. Analysts believe that other possible changes to AI chip export regulations from the Trump administration present another obstacle for Nvidia's shares. Late Tuesday, Reuters reported that Trump officials are trying to tighten a Biden-era AI trade rule that restricts access to U.S. AI technology. Big Tech has urged Trump to revoke the so-called AI diffusion rule that Biden signed into law in January, just days before he left office. This regulation would use a tiered structure to limit chip exports per nation. In an effort to prevent chip smuggling to China, the law limited the quantity of AI chips that around 150 countries could buy from U.S. corporations without a special license, with the exception of 18 key U.S. allies, or Tier 1. India, Switzerland, and Israel are examples of these Tier 2 nations. The United States has previously banned Tier 3 nations, including China, North Korea, and Iran from the chip trade. In May, the AI dissemination rule would become operative. According to Reuters, officials in the Trump administration are considering doing away with the tiered system and implementing a worldwide licensing system with government-to-government agreements, which may make the rule more stringent. Investors were told late Tuesday by Citi analyst Atif Malik that these modifications, if true, would be potentially more strict than Biden's, as they would put AI chips at the center of tariff negotiations. According to Malik, this would make the stock more uncertain. Stacy Bernstein, in his own note, Raskin stated that he thought the current regulations were burdensome and arbitrary, and that it appeared obviously worse to replace a global framework with bilateral agreements that were individually negotiated. Raskin went on to say, "Given the growing decoupling of the United States from the rest of the world, we see a risk that such regulations will create more opportunities for non-U.S. options like Huawei, who, despite their lack of competitiveness in head-to-head competition, may be seen as more viable if they become the only option available." Given the recent H20 ban, we are about to see this in China anyway. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Adding to a growing list of performative launches from Chinese tech giants, there was China's Xiaomi overnight releasing its first open source reasoning model, another one that competes with larger models like America's OpenAI's in public benchmarks. Now, China's momentum can also be seen in stock performance. Take a look. Since Trump's inauguration, the K-Web basket of Chinese internet stocks, it's up about 9% versus a more than 12% decline for the NASDAQ. Alibaba, that's up 40%. Nvidia, it's fallen more than 20%. It's all in the numbers there, guys. The president's first 100 days haven't been kind to the non-semi megacaps either. We made up this graphic to sum up the contrast between tech's hopes at Trump's inauguration. All of these people were there, seen through their generous donations as well. And then the reality, the bottom line, how their shares have performed since then. Major contrast there. Finally, guys, earlier this week, we talked about a growing split when it comes to AI policy within tech circles. Now, the Trump side firmly focused on containment. That's tariffs, export controls, now potentially one-off chip deals. There's an increasing chorus on the other side, including Jensen Huang, who are arguing for the diffusion of American AI around the world. Huang reiterated that today, and you guys, at least to me, it feels like those voices are growing in order to try and protect American AI as China gets closer and closer.
Yeah, which also sort of brings up the point that investors have around Nvidia, which is what does the Chinese market look like for Nvidia? Remember that surprise $5.5 billion write-down they took because of excess inventory on the H20s after the export controls. How much business at this point is Nvidia doing with China, and is the assumption that that's just going to continue to decrease as this race heats up?
So there's China, right, which we know now is more than a $5 billion hit, which is really interesting because it essentially means that Nvidia is unable to sell those chips, largely the H20s, elsewhere in the world. But this AI diffusion rule, some are arguing, is even more consequential because this is other countries around the world, and Nvidia gets a lot of its revenue and profits abroad. This rule that Trump is reportedly considering changing would take away the tiers, okay? Like basically you have certain countries that get X amount of chips, certain countries that don't, et cetera, et cetera. This would basically make it so it has to happen on a deal-by-deal basis. And guys, we've had a preview of what that looks like, right, in the broader trade talks. Really tough. So if AI trade, Nvidia chips, AMD chips are subject to that kind of policy, that's really, worrying. That's very bearish for Nvidia investors. It means that China is not the only problem. Countries around the world are going to be subject to the same kind of negotiations, the same kind of uncertainty.
In order to comply with increasingly stringent U.S. trade regulations, the U.S. government essentially prohibited exports of Nvidia's H20 chips designed exclusively for the Chinese market, which caused the company's stock to plummet earlier this month. According to rumors, the Chinese tech giant Huawei is attempting to close the gap by launching a new, cutting-edge AI technology that is supposedly more competitive than Nvidia's previous generation H100 chips. Additionally, Trump has paved the way for semiconductor tariffs. Analysts at TD Cowen suggested this week that the administration might impose up to 25% tariffs on semiconductors as early as July. In the face of the rapidly worsening trade relations between the U.S., China, and other important trading partners, CEO Jensen Huang has courted world leaders. Huang is scheduled to go to Washington, D.C. on Wednesday after meeting with leaders in Japan and trade authorities in China earlier this month. Given that we believe the demand for AI is still generally solid and that the technology itself has some protection from direct tariff effects, it is regrettable that AI is becoming so entangled in poorly thought-out, self-inflicted geopolitical moves, according to Bernstein's Razgon. Servers and GPUs are among the computing items that are currently free from reciprocal tariffs under the Trump administration. Furthermore, even if those policies are abandoned, the majority of Nvidia chips are imported from Mexico as AI servers, which are free from U.S. tariffs under the USMCA, as Razgon previously pointed out. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Very interesting comments from Jensen Huang there, echoing, I think, what any number of people who follow us closely have been saying lately in terms of China's abilities. I would assume he's going to share the same with the administration, with Congress as well, in part because he's dealing with the possibility of sectoral tariffs that conceivably could hamper our ability in this country to continue to advance at the same pace.
Exactly. And Huang, he kind of spoke to me about the fact that he has invested and does want to invest in the U.S. But when it comes to AI, it's not just a matter of AI specifically. It's a much broader ecosystem that has to be able to support it, from the skills to the energy to, of course, the tariffs, and to be able to build these factories here in the U.S. If Trump really wants to be able to onshore, as he said he does, there is some questions about exactly what the outcome of his tariffs are going to be and whether you are going to be able to have that manufacturing return to the U.S. in the way that he wants.
I guess I'm just wondering on the incentives, if they are aligned. Nvidia, obviously Nvidia is a big U.S. company and wants the U.S. to win, but China remains an important market for Nvidia after we saw that big write-down when the chips were banned.
Sarah, it's absolutely correct. I think there are a lot of questions as far as what the impact of tariffs are going to be. And if the U.S. is going to really be able to remain competitive, there are certainly concerns among lawmakers who I speak with about the U.S.'s ability to remain ahead of China. As you heard him say, China is only right behind us. They have a lot of capabilities. And I think you've seen a lot of changes right now in how the various administrations have approached AI. Biden had a plan that he put forward, but the Trump administration has basically reversed a lot of that. We don't know exactly what's next or what it looks like. And when I talk to folks in the AI industry, they say that that really needs to be there for the U.S. to have a seat at the table and to continue to be a leader globally when it comes to AI standards and what the policies and rules of the road are.
Yeah, we talk a lot about their lead in China in EVs. Today, big note out of Morgan Stanley about their lead in robotics. And
due to the strong demand for its graphics processing units, GPUs, for use in AI data centers, Nvidia has grown to become the third largest corporation globally, with a $2.7 trillion market valuation. In terms of valuation, Nvidia is not far behind Apple, and the chipmaker is expected to surpass the consumer electronics behemoth based on their respective one-year median price forecasts. Nvidia's 12-month median price objective of $160 indicates that it could see 47% growth in the upcoming year. That exceeds the 17% gain that Apple stock is anticipated to produce over the course of the following year, based on its median price objective of $245. Given that Apple's earnings are predicted to rise at a significantly quicker rate of 48% in the current fiscal year, analysts predict that Nvidia will surpass Apple in size within the next 12 months. The exceptional demand for Nvidia's most recent generation of Blackwell AI GPUs is what allowed the company could achieve such remarkable growth. In the fourth quarter of fiscal 2025, the business sold $11 billion worth of Blackwell processors, which accounted for over one-third of its total income from data centers. Notably, Nvidia's data center revenue almost doubled year over year to $35.6 billion in the most recent quarter, and Blackwell's contribution amply demonstrates that it is now making a greater impact for the business. Due to significant investments like the $500 billion Stargate project, which is spearheaded by OpenAI and SoftBank, the demand for Nvidia's data center GPUs is anticipated to continue to be strong in the future. The Stargate team anticipates spending a whopping $100 billion this year and an additional $400 billion over the following 4 years to construct AI infrastructure in the United States. 400,000 NVIDIA chips are anticipated to be used at the Stargate project's first data center location. According to reports, the top-end GB200 processor sells for $60,000 to $70,000, while the entry-level Blackwell B100 GPU typically costs between $30,000 and $35,000. NVIDIA could make at least $14 billion from the first Stargate site if those 400,000 chips are sold for even $35,000 each. With 10 Stargate locations anticipated to be constructed in the United States, NVIDIA has a huge chance to maintain the remarkable growth it has been achieving recently. Furthermore, the semiconductor giant will benefit from significant investments made in AI infrastructure this year by major IT businesses. Furthermore, the business is accelerating in sectors like the automotive industry, where sales are predicted to rise sharply this year, and where a $300 billion addressable opportunity indicates that there is enormous potential for expansion. We've seen why Nvidia's market capitalization is expected to surpass Apple's within the next year. But the chipmaker's appealing pricing is what makes it worthwhile to purchase. Currently, investors may purchase Nvidia for 24.8 times forward earnings, which is less than Apple's 28.7 times forward earnings multiple. Nvidia may surpass Apple in the coming year due to a number of factors, including quicker growth, a lower valuation, and the robust AI chip industry, in contrast to the possible fall in the smartphone business. There are several red-hot growth stocks that have sold off and no longer have the premium that they once did due to the market-wide sell-off. For investors, this is great news since they may be able to recoup that premium when the market bounces back, making a tidy return. In my opinion, Nvidia is a rapidly expanding stock that is currently worth purchasing, because I believe this is the right time to jump in, and it has great growth opportunities ahead of them. Over the last 2 years, Nvidia has been the most impressive growth story, but 2025 hasn't been so kind. It is currently about 27% lower than its peak after being swept up in the market-wide sell-off. Nvidia's dominance in the data center GPU, graphics processing unit sector, has contributed to its astounding growth over the last few years, because they are so effective at handling workloads that demand a lot of computation, including training AI models. GPUs are the preferred tool in this sector. By connecting more GPUs in a cluster, the effect of GPUs doing many calculations in parallel can be further enhanced. Because of its supremacy, Nvidia has a strong market share position and the top products in this industry. However, because the market thinks Nvidia won't be able to meet the growth forecasts that were previously factored in, the company's shares was sharply discounted. The stock's value consequently plummeted. It is just slightly more costly than the overall market, which trades at 20.5 times forward earnings, at 25 times forward earnings. This is the case even though this year and next are expected to see enormous growth, and by 2028, data center capital expenditures are expected to surpass $1 trillion. Given that the current capital expenditure amount is over $400 billion, and that Nvidia's data center GPUs generated $115 billion in the last 12 months, it is evident that a significant portion of this spending goes to the company. Investors are more concerned with the events of the next few months than the next 5 years, so if this prediction comes to pass, Nvidia's stock is a no-brainer purchase at this price. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
But today, IBM is taking a Leviathan leap in the AI and tech race to research, develop, and manufacture AI and quantum computing technology here in America. Big Blue announcing it will invest $150 billion over the next 5 years to solidify its lead globally in production of mainframes, which store and process data at speeds high enough to carry out millions of instructions simultaneously. And $30 billion of the $150 billion will go toward AI and quantum computing research and development and build-out. This afternoon in a Fox Business exclusive, I spoke to IBM CEO Arvind Krishna about Big Blue's big bet on America and how he expects the investment to keep IBM and the U.S. at the head of the pack.
So, Liz, we are extremely focused on leveraging American ingenuity and American innovation. When I think about artificial intelligence, quantum computing, mainframe computers, this R&D investment, coupled with all of the associated manufacturing, is going to allow the United States to be at the front of all those three technologies.
So when you talk about the money, we know that it's going to go into both R&D and manufacturing. I want to tackle the manufacturing piece first here, Arvind, and that's because the administration has pushed companies very hard to bring manufacturing back to the United States. You guys are already here, so let's talk about the mainframe part of this. You manufacture the mainframe in New York State, correct? And so what else is going to be put into the mainframe business?
So as we think about the mainframes, we're extremely proud. Over 60 years, we manufactured the mainframe in Poughkeepsie, New York. But now as you begin to think about adding artificial intelligence, making the mainframes quantum safe, making them proof against all of the cyber attacks that are going to come, all those additional capabilities are also going to go into the mainframe right here from New York State.
The Z17 mainframe has quantum-safe cryptography, AI-powered security. How much faster do you anticipate it will get with the money that you're going to spend in R&D?
Look, we improve the mainframe every couple of years. As I look upon it, whether you go back to Moore's Law or you just take semiconductor innovations coupled with design innovations, coupled with all of the software that we put into these systems, I expect that each of these systems' total capacity doubles about every 3 years. So in this time period, we're going to see 4 to 8 times more capacity on the mainframe, not even coupling yet with all of the AI innovations and all of the quantum innovations that are coming.
Okay, that is fast. And that brings me to quantum computing. A big chunk of the $150 billion that you're going to spend will go into quantum computing. You guys already have a big fleet of quantum computers that are up and running. So my question to you is, they're housed, I think, in the data center in Yorktown, New York. You also have a hub in Chicago. Will you be spending some of the money to build new operations, or will they be spread between these two?
We are actually going to be building a brand new data center also in Poughkeepsie, New York. We're going to be housing our latest generation of quantum computers over there. You mentioned the fleet we have. We have so far brought 75 quantum computers to the cloud, 13 of which are operating right now, and you can access them from the hubs you mentioned. However, we are going to be building brand new facilities because we have set out a roadmap to build a fault-tolerant, think of it as an error-proof quantum computer over the next 4 years. And all of this investment is going to go towards those milestones, the added capacity, but also the roadmap to a fault-tolerant quantum computer.
Arvind, the big question is, how much of the $150 billion was already in place for a previous 5-year plan, or how much of it is new? Because we know that a lot of companies have come forth and said, we're going to spend this and that, and some of it was already baked in. They're trying, obviously, to get the attention of the administration. Number one, how much of it is new? And number two, did you work with the administration on this?
So if I look at our R&D number, we have increased our R&D spending by 60% if I look at it from a few years ago to what we're spending now. That R&D in turn fuels the manufacturing and fuels the additional investment that is needed. So if I go back to our numbers from a few years ago, we're looking at a good 60% above where we were. We are always in conversation with the administration. We really appreciate this administration's focus on American innovation and helping that drive global business. So you could expect that those conversations have been happening in the background. But this investment is from IBM. This investment is money that we are putting down because we believe in the economic opportunity both here and globally.
It's exactly, if I spoke for the administration, which I don't, but it's exactly what they want to hear, is bringing quality jobs back here, not just the basic manufacturing that China is doing.